Oh, hello, folks. Hey, it's Shooter. Hey, I'm going to go over a Mentis here in primary waves. Of course, at the end of our presentation, please do review our disclosures. Now, I'm not picking on you, Peter. It's just I think this is a good example of, it is a very viable outcome, the way it's drafted and, measuring your fibs relatively. However, let me jump over to motive wave. Now, the challenging part when you look at a chart with such a limited amount of history, and basically we have whatever this was in 2006, and it basically is flushed ever since then. So the challenging part is, how do you actually measure this? Well, your measurement is from your low, and I'm just going to drop this out of here for a second. And this is where manual Elliott wave kind of works, because our low pretty much is right here. So we want to measure that, see what comes out, and that's where we get our 2. And then we just drop in our channel here. Now, so that from a fib extension level, we want to measure the cycle, okay? And again, I'm going to talk about trough, peak, trough. So this is our cycle. So this is what we want to measure, because we're measuring, we want to know what's the upside from this move here that we've had. Forgive me for my mouse for not working. I've got the battery on the charger. It didn't make it for my work today. So usually I like to start the morning Mondays with a new battery or a recharged battery. All right, so putting my golden box up here, just running through my thought pattern. Right. Now realize I'm out here on a monthly, and my target, my first golden box here is 1470, right? My second golden box is 4179. And you can tell I'm tired. I'm having to look at the wave degree. Super cycle. Couldn't remember the color. That's what happens when you get burnt. Right. This was a long weekend, man. The last couple of days I've been snoozing. Just couldn't get enough sleep. All right. So, I would project that our target one is way the heck up there at 44 bucks on a Mentis off of this low, if we actually catch bid. I mean, now granted, the timeline, the ratio here is relative to the length of this leg. This was from January 2009, and our 2 completed in January 2023. So that was 12 years. 2009? Yeah. No, 14 years, excuse me. So 14 years is a long time. We're going to be in a position trade a long time in a Mentis. Where a Mentis really interests me is on this break. If we get above this 899, right, then we've got the FOMO coming. And I've been watching the orders. Orders have been decent. We just need the catalyst to get this up and out. But on the shorter time frame, let me just decompose this for a second, see if it gives it to me. And it does. So we're going to come back down to the weekly, and we're going to take a look at this. This is the challenging part about this count, is that according to this, our top is in, short being, except for maybe we push to 744. But then we get a decent drawdown back to $2 again. So that becomes very challenging for me, because really I need to come in here and put an updated label in here and say, hey, this is where we could potentially go. We need a catalyst to keep this from failing there, get rejecting price. And to a certain degree, we've already rejected price. We didn't get a higher high on that news, at least yet. But the one thing that I'm going to point out with a catalyst here is look at the volume of shares that came out. This right here. It's huge. So I think the next 2 weeks are going to determine whether this continues or not. And basically, usually when you have this euphoria, notice how and they're called 3 generals. Okay, so you got your 1 general, 2nd general, 3rd general. Basically, your first candle is your longest candle, 2nd candle is a little shorter than that, 3rd candle is a little higher than that. And then you're deciding whether you're going to break out. In this case, we broke out. So that is a little challenging to draw, but let me just sort of give you a visual thing. I think it would be something much like this. So we got our first push. So we get our second push, which is a little bit shallower, but we close to the high side of the candle, and then we push just a little bit shallow. So that right there, that wedge, sort of that look, gives us about $10 as far as, so if we get euphoric and we break above that B, that's what I think would be the outcome, at least looking at it from this. Challenging part is, scaling here, because really at 572, adding anything here is challenging until we get a bigger drawdown. So if we get to that 744 and we back test this, what does that come in at 492? Now I would back the truck up at 492 here on this. That's sort of my thought. But Peter, I wanted to sort of take your chart, play off of it, give my visual a little bit. The way that let me come in and bring fibs in for a second, because most people use the regular fib tool. So when they look for a back test, for example, they're looking for either the 61.8 or 78.6 based on their rules, right? And then when we get a breakdown, put in new lows here, off of this next channel, and they're looking for the 61.8, etc. to the upside. So that's where 90% of the chartists, not necessarily technicians, they use those Fibonacci extensions on using one leg. They don't use the entire cycle like I do as far as measuring my numbers. Now, one thing you could do here, and it would be fairly accurate, I would think, is you could come in and you could measure your cycle wave 1, right? And your cycle wave 2. And that would give you a fairly accurate move to the upside once we get that 2 in. So the extension, it would come in a little bit shallower. See how more confined of a look it gives you. That would give us more of a number from 2 to $6 is the first gear. Pretty much that first golden box is guaranteed. We'll hit the golden box. It's just whether it's a flat or an impulse leg, leading or ending diagonal. It's just a matter of what that. Hopefully that sort of helped and explained my take, at least with Elliott wave and fibs and how I connect the dots. So great trading, folks. Until next time.